Hello, it's Friday the 9th of August, and what a week it has been in crypto. After the horrific shakeout on Monday, knife catchers have been rewarded with some pretty nice bounces in most crypto, but we kind of really have reached some important resistance levels where if you didn't catch a knife and you've been watching it, you're wondering where the pullback's going to come. I really think that we are here. Also, in quite a week, we could see some profit taking. We could see some people unwinding some positions or taking some risk off as we go into the weekend. Because although we have pretty calm stuff going on, there is still a lot of uncertainty and risk out there. Not least, potential war in the Middle East, Iran retaliation, still going full throttle in Ukraine and Russia, and there is still an awful lot of baiting going on in Taiwan and with China and US sanctions. So it's not a happy, anything could kind of tip the market and have a little bit of a wobble. If we do talk about what triggered all this, or what everyone thinks triggered this, which was the carry trade unwind and the surprise rate hikes from the Bank of Japan. The Bank of Japan have said some kind of soothing words, but they haven't really given us any clarity yet about what they're going forward. So last week the message was very clear that from the Bank of Japan that the weak yen was a problem and they were going to keep hiking rates. Then of course we had this really severe reaction. 1% move in a currency is a serious move. A 3% move, which is what we saw in the dollar yen, it's a catastrophe. So what his deputy said was that rate hikes were off as long as the markets were in turmoil. Now the markets are not in turmoil. It means that the rate hikes are back on again. So it hasn't really put the fire. It's like saying, if you've got a fire, it's like saying, well, while the fire's burning really hot, we won't pour any more fuel on it. It doesn't say you're going to put the fire out or stop what you're doing. So there isn't really the kind of clarity that the market would like to see yet with what's going on from the dollar yen. I know JP Morgan said 3/4 of the carry trade had been unwound already. I have to say that the carry trade is quite a loosely defined thing, and I'm certainly not sure that that is the case. So, let's see. I feel like we're in a stage of the market. August is typically a pretty volatile month for markets. It can be summer. It's either summer and markets are very quiet in a very narrow range without very many trends or moves. And Bitcoin only has seasonally 2 bearish months a year, or 2 months that are seasonally red. And August is a small one and September is a pretty ugly one. So, I'm being a little bit cautious. Let's put it this way. So let's start with Bitcoin. Now, if we look at Bitcoin on a daily chart, this is Bitcoin CME futures. I'm going to look at this first because these moving averages are sometimes slightly differ from the spot levels. But our first target when we bounced from this 200-day moving average was back to the daily 20 moving average and a gap fill. So we had a big gap, didn't we, on the open on Monday. Nasty move lower, and we have exactly filled the gap. So people in the futures who would have traded this move will be taking profit on this long here. And so potentially this has a little bit of a look of a 3-wave still corrective move, doesn't it? If we take a look at that same move that we have had in the spot Bitcoin, which of course kept trading, there was no gap lower. If we take a look at where we are from all the way from the high in March to the low that we made on Monday, we've reached that really key 50% level, which, if we look left, really important support and resistance level. You can see it was support, then support, messy support, little bit of resistance. So, these levels tend to work through the middle. 61,400 then. Now, we had a little bit of a close above it last night, but we could not get back above these daily moving averages. And in spot Bitcoin, if we take everything else off, unlike the futures, where we found support from that 200-day, sorry, let's go back to the daily. We found support from the 200-day in the futures. In the spot, we now have resistance from that same 200-day moving average. Which one is most market participants looking at? I'm not sure, but you don't want to say that this is not important, because it is. Let's look back at what we've done before we had futures even, but this 200-day in the spot is important moving average. It was support on really sharp pullbacks in March 2023, and it was the resistance that we needed to get above when we finally bottomed in October of 2023. You can see here. So this 200 moving average is a big deal, and it is quite possible that we could see some profit taking heading into the weekend here. And what's really nice about this being a 50% move from this high to low is when mean reverting markets tend to keep mean reverting. So a reversal here would mean the first support would be back testing this 38.2 fib at 58,500. And if we get underneath 58,500, we're going to do 50% back of this entire rally. So we go from this high to this low, and we look at what price that 50% back, and that is 55,900, so basically 56,000. So those are the two levels where I think we would bounce back to in Bitcoin, and we're likely to do that probably in three waves, maybe, but you probably need to see that on a lower time frame. So don't be surprised if that's how it's going to unfold. Another good way for me, I like 4-hour Heikin-Ashis, as you know. I just like them to go from red, see a nice red pullback of a few candles, and then when they turn green again and we find support from these 4-hour moving averages, that would be a good trigger to try it for another swing higher. But just watch out, if you don't get that green trigger here and it stays red and keeps going down, it's not happening. So we have to wait for that bigger pullback. So that's how I see Bitcoin today. Again, bigger picture. Listen, don't be disheartened. Bigger picture on a weekly. This is still a really nice corrective, choppy, overlapping sideways pattern. We have seen really good reaction from these levels, and it's just a matter of making a base and confirming it, and then we will look for that next leg higher in Bitcoin. So let's take a look at ETH. Now, ETH has a little bit underperformed here, but if we look at our fib levels, right, so by that fib retrace levels from the low in June 2022 to the high in March 2024, we bounced textbook from a 61.8 fib retrace and a very nice lows and highs support and resistance level at 2,100. And the rule in this golden ratio zone here in the middle is if you bounce from a 61.8 and you get above the 50%, you're likely to continue higher, most likely to the 38.2, which is at 2,800. And as long as we don't close underneath this 50%, it should now become support. So here we are looking at a pullback. You can see already this 50% pivot level in the middle, which is basically 2,500, 2,485 was resistance. And on a pullback, that's where we would look for it to find support to continue higher to 2,864. So I'm not sure that this is done yet. But if I'm wrong about those fib levels, it's possible that this is just a three-wave correction. And so again, I put my Heikin-Ashi on, and I want to see, or whether you're a price action trader or whatever, you want to see that bullish reversal price action here. And ideally, I would really like to see this unfold in three waves, and it maybe takes its time over the weekend. So that's what I'm looking for in ETH. If we keep going higher, then we know where our target is. So if we just have a little shallow pullback today and then on the open in the US Open, because, you know, possibly this is just a nice little three-wave correction, pull back to this hourly 20 moving average, we could just keep pushing higher here on the US Open. And if we do 2,864 would be the upside target. Solana was the one that I traded the bounce in. And if we take a look at where we are in Solana, we had a really nice move. Now, on weekly candlesticks, This is pretty bullish because I like how we are above this weekly 20 moving average. But as you know, I'm a big fan of 50. When you have a big thrust candle, I'm a big fan of 50% back being support and resistance. So we have this big red, green up thrust candle here, halfway back of this open close was where we found support, and then we kept going higher. And the same thing here with this green thrust candle. This was pretty bullish support, and only when we closed back underneath it did we end up in this bigger correction. So if we apply the same rule here to this, you know, big up green and this big down red, we've got this nasty pivot level here in the middle in Solana, and that seems to be where we've got to. So are we going to keep going higher here or see a little bit of a pullback? These daily moving averages aren't so helpful. You know, whenever your moving averages get really flat in the middle and bunched up, they are not such reliable support and resistance. It becomes more of a kind of trading range. So if we see, can fib levels maybe help us here from the high again in March to the low that we made in Monday. We're kind of messily at maybe a 50% level. But again, we need to see, are we going to pull back into these daily moving averages and find some support? We've had a really nice bounce. This, I think, is that place where we get that pullback and we see where we go next, whether we continue lower or whether we get a higher low or a bottoming pattern and continue higher. Now, there are some altcoin charts that look really kind of quite exciting. So I think one of the first ones, so Gyroscope have, no, not Gyroscope, so Grayscale have rolled out a proposal for crypto funds based on decentralized AI project BitSensor, which is TAO, and Layer 1 Network Sui's token. So they are starting a crypto fund. That Grayscale, you know, have quite a big, well-known institutional name. They will put a spotlight on those tokens. So I thought I would take a look at those tokens and see where we are. Tau is really quite a volatile trade, and when this one trends, it trends really nicely. When we look at the weekly chart for BitSensor, back from the May 2023 lows, we had lovely 5-wave moves in this coin, and we've had a lovely 3-wave pullback to this 786 fib level. Now, we've bounced from a 786 fib level here really smartly. When you do that, if you, for me as a fib pattern trader, when you bounce from a 786, if you get back above this 61.8, your first target, minimum target, is this 38.2 back test for like a wave 1 here. And then you kind of either there or you go higher, maybe to the 236 fib up here, and then you look for a pullback to the middle, and that would be your wave 1. So we can say with this one, based on weekly moving averages and these fib levels, that if we can close and hold above 314.84, we are likely to continue higher to at least 491. That's a pretty nice move. At least 491, maybe 600, which is where this 236 fib is, before we see a bigger 50% pullback. So I'm watching this level pretty closely here on the daily. We got to it last night, and we are a little bit sideways here. So it's only for me a confirmed breakout. And you can see this 314 level is pretty neat support and resistance. If we go left here on the daily, that's the level we need to close above. I would really like to see if this is going to keep going higher. A shallow pullback in BitSensor that maybe holds around 280 and then turns up higher again, and we see if we can break out. And that one looking, I think, pretty interesting. Let's take a look at Sui. So if we zoom out in Sui, well, the Binance chart's got pretty good history. Let me put regular candles on. Let's go back to the low when we launched, May 2023, to this high. This is another one. Bounced pretty nicely from a 786 fib level. So the confirmation level for me, if we get above 0.895, we will see a swing to at least 1.3, 1.4, potentially 1.7 in Sui. Now, what if, you know, because not all charts have this spike low, here, what if that's not the fib pattern and we should actually take this more recent swing? Or, well, in that case, we would say reversing at an 886 after this false breakdown here at 0.57, we're already going up because we're above this 786, but we haven't taken out this swing high, and this swing high becomes very important. If we take out that swing high, 886 reversals normally go back to 50% in the middle. So again, that keeps us with that 1.27 target. That's also where the daily 200 moving average is. So there's a lot to like about this. Another way to look at it is fib retrace levels from this high to low. And if we do that here we are, look at the 236 fib. And if we get above that, we're likely to go to 50, so a little bit higher. So this 0.86, 0.89 is really important support and resistance for SUI. It would be weird if we didn't see a little bit of a pullback here towards these daily moving averages, or even if it's just a shallow one, before we continue higher. Now, daily 50 moving averages are normally pretty sharp. If you break above them, you kind of don't want to go back underneath them. So I would say that we are likely to see quite a shallow pullback in SUI, and 0.76 could be all that we get in this pullback before we turn higher. Back underneath 0.76 in this daily 50 makes it less clear, and we're likely to see maybe a bigger bottoming pattern, maybe an inverted head and shoulders pattern or something like this. But it's clear in SUI this is the big deal, resistance. To get above 0.86, 0.89 and closing and holding above it takes us to at least 1.32, maybe 1.5, 1.7. So that's how I'm seeing Tau and SUI. I think they're really interesting, and I think they've got a really good macro reason. And because I like buying pullbacks, I'd really like to see one here, and I think I would maybe dip in. So SUI and Tau have some quite interesting fundamentals for reasons to rally this week. One of the favorite fib patterns we were looking at this week was the bullish Gartley pattern in WIF. Let's see, dog with hat. Let's see how that got on, and if we manage to get anywhere. Let's see if here's my weird dog with hat bullish Gartley pattern. Now again, just like we said, when you reverse at a 786 fib, which we did, you confirm the reversal by closing above the 61.8. So here in with that number that we need to close above to be going up higher is 1.959, and that's where our resistance is. Let's put regular candles on. That's where we've had one little knockback, and that's the level we've got to get above. I would like to see a really nice three-wave correction here, maybe back to this swing low, or back to the hourly 200 moving average, and then this one turn up higher again. And if we close above 1.959, first target is going to be 3.06. So that's a 50% move in WIF if we can do that with this bullish Gartley pattern. So let's get this chart back where we can see the pattern, and then that would kind of put us at the top of this channel. When there's our first target, and the top of this channel, it would be third touch here. So 3.06 would be the target. First time back to this important resistance level. Look, if we look left, look how important this support and resistance level is. Highs, lows, highs. We are likely to have a little bit of a pullback here before we continue higher. So dog with hat looking really good, but we've hit the first resistance in that one as well. How about all the other means? They can be really fun, but you have to trade them carefully. We've got the same story here in Pepe, which is one of my more favorite ones. Now let's look at this on the weekly. Take everything off. This is another chart, look, like Tau and all of these others real movers. Lovely, 5 waves up, 3 waves back. Now I was a little bit dubious with Pepe because normally you would come back to the bottom of wave 4, which is down here around sort of 510, and you would normally do it in a big 3-wave move. Now sometimes though, this third leg, the C leg, is only 61.8 of the first swing, and if we measure, let's hide this, from this high to this low, projected from here, that's where we bounce from. So if we continue lower, obviously that's where we go. And we have not, although this is a really nice bounce in Pepe, we haven't quite reversed. This is a very nice candlestick, but unless we get above that weekly 20 moving average or more than 50% of this downswing, it's not clear that we are going up again yet. If we put our fib levels back on, let's put them back on. Again, this time we bounced from the 61.8, but we have not got above, unlike in ETH, where we recovered that 50% pivot level in the middle, we have not managed to do it in Pepe. So we need to close above 893 to be the next swing. And if we could close above 893, our next target should be 1,089 and then 1,332. So Pepe against Tether at the moment, just like every single really nice chart that I look at, we've had a really good bounce and we're in resistance and we are at a little bit of a pullback level for now. So trade carefully. If you missed or you had some FOMO, we may get a little bit of a nice shallow pullback to let you in.